What's up, everybody? Michael Silva here to do some technical analysis on the S&P 500. Another record close for the index. We're going to be looking at the daily time frame and the 30-minute time frame today. Let's get into it. All right, welcome back. We are here on the daily time frame. The S&P 500 closed today at $3,397.31. Oh, so close to the 3,400, not quite even making it there. Fell short within 4 cents of the 3,400 psychological level that we have been talking about here. In today's video, we're going to be bringing out the Fibonacci Extension tool here shortly, and that is really to see where the price can potentially go. We're right now in an all-time high, so there's no real resistance up above other than psychological round numbers. So what we'll do with that tool is map out some areas of resistance on the daily time frame. So what have we been looking at recently? Well, we have this rising wedge pattern on the screen right here. That is known as a bearish type pattern, and it's moving into obviously an area of resistance right here at the all-time high, closing very slightly just above it now. So we're still really in that same area where this could potentially be a double top. So it's something to watch out for. What could potentially happen if we keep getting pressure more to the upside? Well, if we get some significant closes above here, we might have some more momentum shoot us in a northern direction. However, when we take a look at the McClellan oscillator, which is a market breadth indicator, you can see it kind of just dying off right here. So the breadth of the market is not doing too well. We have, 20 to 30 companies that are advancing to all-time highs, and then the rest of the S&P 500 index has not fully recovered yet. Then when we look at this volume accumulation percentage indicator right here, we can still see the volume tapering down more and more, creating negative divergences here at this particular point in time. So we do have quite a few bearish things to consider. However, you got to understand the context of the chart. And I do this on my 30-minute time frame where I kind of scoped you out the other day. But I want you to see here from this range, if we zoom out, you got to keep in mind the context over the overall chart. And the overall context of the chart is bullish. It has been pressing up and up and up. Now, if I keep going back further and further, you'll see what I mean. So obviously, clearly, there's a lot of pressure to the upside. And on a shorter term basis, when we just look at from mid-March till now, we're seeing that the market is still really buying up the dip. So we have a rip up here, then the dip, then a rip, dip, rip, dip, rip, dip, rip, dip. Dippity rippity, dippity rippity. So there's been a lot of buying of the dips. And I personally think that that is still going to continue until we break down through some major areas. And the major areas that I've been keeping an eye on, well, the ultimate major area is here over at 3,000 that we talked about quite some time ago when we were making those videos. And then the other level is 3,200. 3,200 is more of a shorter term floor, but I do see that as a good buying opportunity if we get a pullback. Now with these breadth indicators and the volume kind of dying off here, and we're coming into a double top and a rising wedge, it looks like we'll eventually see some type of a pullback, but you want to make sure that if we start getting squeezed to the upside that you can trade into that momentum as well. Now, when we look at the VIX chart, let's go hop over there. Here on the VIX, as you can see, we had a breakout of this falling wedge pattern, which could very well send the VIX higher. However, there's still this gap opened up right over here, and I personally think that it'll come down eventually to fill it. So the 22.5 where it's at, we would see the VIX come down to at least here, this 18.1 to fill that. Now, that's just speculation and a belief because I do see that the VIX fills its gaps quite often. So if we come down there to that 18.1, then we see the full breakout of this falling wedge pattern. Potentially. Now, how far is a drop from here to here going to bring the S&P 500? Well, we're at all-time record highs, so we're going to have to look at the Fibonacci Extension tool to really kind of determine where it can go. So let's go ahead now and bring out our Fibonacci Extension tool and map out where the price might head to next. Now, in order to use the Fibonacci Extension tool, what we kind of got to look at is where the price pulled back to, and then where it got rejected from. And we pick out 3 different points. So really, obviously, we see this huge pull down to this level around here would be the probably point A for me, and you could change it around. You can use your own method if you'd like, but that would be point A for us. And then really what we saw is a run up, pull down, a lot of run ups and pull downs, but what we're looking for is more significant ones. So the more significant ones that I see is really the run up to this island reversal pattern, and then we had a lot of volatility in that day, pulling us back down to 3,000. So I'm going to go ahead and draw the Fibonacci extension tool using an area from right here. So it did pull down pretty much down to 2196, but there's more data points up just a little bit higher than that. We have the low wick here, another low there, and then we have the upper wick there. So I'm just going to split the difference right there and call it the low right here at 2298, or you can call it 2300 just to make it easier. And then we're going to run up to the island reversal pattern, and there's a lot of data points right here at this particular point. So 3220, let's call it. 21, whatever, and then back down to 3,000, which we'll draw the tool out for. So now when we hit those 3 points, we can now look at extension levels for the S&P 500. So let's zoom in here and take a look. All right, so now we're pretty zoomed into the rising wedge, and we're looking at the Fibonacci tool, and look at these levels on here clearly acted as levels of resistance and support throughout the chart. You have this 0.23 level right here that obviously acted as resistance. That's where point B was, where the island reversal pattern was. But once we broke above it, we moved higher into the 0.38 right over here, and then clearly it got held up, it got bumped up above, then pulled back down, and now we back tested it this just previous trading day, not today's, but the previous day, back down to that 33.50 range. So 38 looks like it's holding as a level of support. So what are the next levels to keep an eye on? Well, we have the 50% extension right here at 34.60. But what I like to point out is the levels that actually hold the most weight, and that's typically the 0.618 level. So I'll draw a line here, make it red. So the 0.618 level, and then what do you know? That's 35.68. That's really close to that 3600 level, which I think his name was David Kostin, the chief equity strategist for Goldman Sachs, said that the price, that's kind of where they're predicting by year's end to go for the S&P 500. So 0.618 puts us right there. Then another level is the 1 and 1.618, but that is quite far away. So boom, we have 30, almost 4,000 right there, and then even higher up at pretty much 4,500. So those are going to be some interesting levels going forward that we'll monitor if the price continues to keep heading up higher and higher. But the next level to keep an eye on this chart would be that 0.5 level right here at 34.60. It's kind of a zone or kind of a range. So if we see it come up to there, it'd be likely to see some sort of downwards pressure, but we got to play it day by day to see if it reaches there. So if we do get the price to continue to head up here into the 0.5 range at 34.60, will we then get rejected and then maybe see that pullback? And now I'm not personally looking to short the market on a downwards move, but I am willing to buy the market because the market has been in this buy the dip, sell the rip sort of mentality. Now, when it comes to trading, you want to make sure that you have some stop losses in place because you don't want to have the market fully roll over on you or anything bad to take place. And it's really just good risk management practice to have a stop loss in place and to monitor your trades. So if we do get a pullback, 3,200 would be a very strong level to buy back into. We also have this 0.38 extension, which clearly right here, like I said, it acted as support and kind of struggled to get around it. And then the all-time market high is right around here too. So it just makes sense that the price is getting held up here. Now, if we start getting a couple daily closes next week above the previous all-time high, that could very well say that this market still has some legs to move to the upside. Now, when I look at the rising wedge pattern that I drew out, you can technically call it a breakdown and a false breakout of how we drew it out. But notice how it's kind of cut these wicks from the lower portion right here off. If you were to actually add those into the equation there, it would actually still resemble a rising wedge, but it would technically mean that these price has not fully came out yet. So that's up to you if you'd like to do that. Now, it doesn't honestly really matter. Just know that it is in a rising wedge type pattern and it's coiling tighter and tighter and moving higher and higher. So if we do get a breakdown, a true breakdown where volume increases and we get a big bearish red type of candle, that could signal that, hey, the pullback is underway and we could see that pullback take place. Let's now go hop over to the 30-minute time frame and map out some support and resistance levels. All right, so we are here on the 30-minute time frame. The day started right here, that blue vertical line going down the screen, and every candle thereafter represents 30 minutes of data. The red lines on the screen are areas of resistance that we mapped out yesterday, and then the green ones are areas of support. So, did our areas of resistance and support, did they hold up? Short answer is yes. However, two levels down here, the 70 and 75, those did not get touched today. Now, what was concerning to me on yesterday, well, I talked about these dip and rip, and then it ended with these high upper wicks right here, some indecision, meaning that it might start heading back down to the downside. But we ended up gapping up for the day and moving higher into our level of resistance. Clearly, that level of resistance held for a good portion of the entire day. So we had 1, 2, 3, 4, 5, 6, 7, 8, 9, technically 9 candles. So 9 candles, each 30 minutes apiece, represents pretty much the entire portion of the day, except for the last 2 hours of trading. That area of resistance at 33.90 held up very strong. Now, the area of support that we mapped out was 33.80, and right here on the first 30-minute candle, came back down to touch it. The next candle almost reached back down to touch it. And then these two candles here did the same thing, coming very close within a couple of dollars of touching it. So what does this mean? It means that today was very, very choppy until we got the breakout to the upside. As you can see, we had green, then all the way red, then we green, and then red further, and then green, and then a little pullback to ultimately make it up. So what a chop fest and a lot of indecision trading today. However, now there are some key levels to change. This area that was resistance now is going to act as a solid area of support. Why is that? Well, when resistance is broken, it then becomes support. An area of resistance to keep an eye on is going to be 3,400. That is going to represent the all-time high. So if we get a close above that, that'll be another all-time high close. Now on the daily time frame, we mapped out the areas of resistance using the extension tool. I don't think in one simple day it's going to be able to swing at those levels. Who knows nowadays? It is something to keep an eye on those levels for the daily time frame, but on the 30-minute time frame, these are the levels to keep an eye on when the market opens up next week. That's all I have for you on today's trading video. I will see you on Saturday for my weekly scan where I go over my weekly watch list. Talk to you then.